Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about G Resources Group Limited Annual Report. G Resources Group Limited offers a diverse range of businesses and services across various sectors. The company's financial services segment provides a comprehensive suite of offerings, including securities trading and brokerage services, corporate finance advisory services, margin financing, money lending, investment advisory and management services, asset management, and provision of placing and underwriting services. In addition to its financial services arm, G Resources Group Limited also engages in principal investments, managing a portfolio of various assets such as listed shares, senior notes, perpetual notes, unlisted investment funds, equity investments, hedge funds, and exchangeable securities. The company's real property business involves leasing office units and car parks, as well as managing foreign investment properties and unlisted real estate investment funds. Furthermore, G Resources Group Limited provides trust and company services, fund investment services, and operates commercial properties across multiple regions, including Singapore, Hong Kong, China, the United States, Europe, and internationally. The company's extensive reach and diverse range of services make it a significant player in the global market. G Resources Group Limited market capitalization of $5 billion is significantly larger than the average industry peer of roughly $1 billion. This shows that G Resources Group Limited holds a significant advantage in their industry. G Resources Group Limited trades at a higher price-to-earnings ratio of 9 times and a lower price-to-book ratio of 0.38 times relative within the industry. This shows that investors are pessimistic in the industry in general, and we should dive deeper on the reason. Additionally, the stock appears attractively priced. Investors should evaluate if the business earnings is sustainable and if the assets are valuated rationally. Overall, we need to identify if this makes a good investment on the long term, or is it going to be an extended period of low valuation or a value trap. The balance sheet appears very conservative, with liabilities representing only 2% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified by examining the key factors that have contributed to an increase or decrease in revenue. On the positive side, the financial services business and principal investment business have been significant contributors to revenue growth, with external revenue from segment reaching $27,292 and interest income totaling $23,393 respectively. Additionally, fee and commission income has increased by approximately $0.9 million, while fair value changes of financial assets and investments in perpetual notes at FVTPL have seen a substantial increase of around $72 million. The IPO margin financing business has also experienced growth through targeted marketing efforts and partnerships with brokers. Furthermore, the securities trading and brokerage services have expanded their client base and enhanced credit monitoring, while the placing business has sustained growth due to its established industry network and referral pipeline. On the other hand, revenue decline can be attributed to several factors. Interest income from deposits with financial institutions has decreased by approximately $14.9 million, while dividend and distribution income from financial products has declined by 34.7%. The fair value of unlisted equity investments and exchangeable notes have also seen a decrease of USD $12,841,000 and $100,100,000 respectively. Furthermore, interest income from financial products has decreased by 12.3%, and other income has dropped to $17,799 in 2025 compared to $28,343 in 2024. The company's financial performance has shown a significant improvement in its ability to generate positive operating cash flow. According to the latest figures, the company achieved an operating cash flow of $742,887 in 2025. This is a notable increase from previous years and indicates that the company is now able to cover its operational expenses without relying on external financing. Furthermore, when looking at the broader picture, it becomes clear that the company's net cash generated from operating activities has reached $1,043.2 million. This substantial amount of cash flow not only confirms the company's ability to generate positive operating cash flow, but also highlights its financial stability and resilience. With such a strong cash position, the company is well equipped to invest in growth initiatives, pay off debts, and reward shareholders, ultimately driving long-term success. The company's debt level and interest expenses have undergone significant changes between 2024 and 2025. In terms of debt level, the company has seen a substantial increase from $7.5 million in 2024 to $13 million in 2025. This rise is largely attributed to an increase in investments in debt instruments measured at amortized cost, which grew from $76,142 in 2024 to $208,990 in 2025. However, the company's long-term time deposits have decreased significantly, dropping from a negative balance of $150,000 in 2024 to zero in 2025. This change suggests that the company has reduced its reliance on short-term debt instruments and instead opted for investments in debt securities. Regarding interest expenses, the company has experienced a decline in interest income. Specifically, interest income decreased from $56,268 in 2024 to $42,006 in 2025. Additionally, interest income from the money lending business dropped from $0.7 million in 2024 to $0.5 million in 2025. Overall, these changes indicate that the company has taken on more debt and seen a corresponding increase in its debt level. However, it is worth noting that the composition of the company's debt has shifted towards investments in debt instruments, which may have implications for future interest expenses. The financial performance of various segments and regions within the company has been analyzed. The financial services business and principal investment business both demonstrated strong profitability, with each generating a profit of $55,964. Additionally, the real property business showed significant growth in assets and moderate increase in liabilities, indicating overall stability. However, upon closer examination, it appears that these positive trends may be short-lived for some segments. The principal investment business experienced a decrease in assets and a slight increase in liabilities on page 9, suggesting a potential decline in performance. Furthermore, the real property business had low external revenue of $954 compared to other segments, indicating areas where improvement is needed. In summary, while certain segments have shown strong financial performance, others may be experiencing difficulties that require attention. Management is optimistic about the company's outlook, citing several key strategies that will drive future growth. The diversified multi-asset approach, which targets both income generation and capital appreciation, has been successful in increasing net profit due to fair value increases and higher trading volumes. The company's focus on a strong fixed income component serves as a safety net for investment portfolios, aiming to minimize equity market fluctuations. This strategy is expected to continue delivering results, particularly in the principal investment business segment, which recorded a profit due to fair value increases and investments in perpetual notes. Management is also exploring opportunities for growth, including acquisitions of commercial properties in both domestic and international markets. The healthcare sector investment is seen as having significant potential, and the company will review its portfolio regularly to identify areas for incremental investments. Overall, management is confident that the company is well prepared to support market demands and deliver sustainable growth. By continuing to diversify its assets and focus on high-quality investments, the company is poised for long-term success. The company has made several strategic acquisitions and divestitures to optimize its portfolio and enhance growth. In terms of acquisitions, the company has invested in various financial technology, information technology, and electric motor system innovations through private equity funds and hedge funds. Additionally, it has acquired additional equity interests in a subsidiary for $116,000 and selectively purchased high-quality commercial properties in core global markets. The company has also made significant divestitures to rebalance its portfolio. It listed 3 unlisted equity investments with a carrying amount of $26 million, resulting in a gain. Furthermore, the company recorded decreases in fair value of unlisted equity investments and exchangeable notes totaling $14 million. These transactions demonstrate the company's efforts to adapt to changing market conditions and optimize its financial performance. The company has a history of paying dividends to its shareholders. In fact, for the year ended 31 December 2024, a final dividend of HKD 0.12 per share was distributed among the owners. This demonstrates the company's commitment to returning value to its investors through regular dividend payments. Furthermore, the board has proposed an even higher dividend payout for the year ended 31 December 2025, with a proposed final dividend of HKD 0.18 per share pending shareholder approval. This suggests that the company is confident in its financial performance and is willing to reward its shareholders with a significant dividend distribution. That concludes the financial summary for G Resources Group Limited. Feel free to comment below, and I will be happy to answer them when possible.